the structure of British pound sterling, United States dollar. And we'll be using the monthly time frame to look at it. So in the monthly time frame, we'll see in 1972, the British pounds exchanging for 2.63672. And we'll continue to have a drop in price and came down in 1985 at a very low 1.05166. And if you look critically price return in August 2022 to retest a 1985 low, look at the age gap, a reaction that happened that was a monetary policy intervention in 1985, and the price came back under the leadership, and we've seen a price reaction, and the British pounds quickly reacted on the falling British pound sterling, and we had a very strong rejection here. Look at what happened here in 1985, came back in 2022, 2023, 2022 year, precisely December, and you have seen a major intervention in British pounds. And if you look back, you see you have a descending trend line DTL. We'll have a resistance structure 1, resistance structure 2, breakout of structure. I'm more concerned with all bars. I want to see where structure was broken, either from a downtrend or from an uptrend. It is a clear break of structure on monthly time frame. You know, it's a little bit difficult trading monthly time frame, but it gives you an overview. A breakout of structure followed by a retest, and subsequently every price action became support, become resistance. One, after that break of structure, we had a break of structure in 2003, and we had a touch in 1998. We had a touch in 1992. On a descending trend line, we had a breakout and a retest twice, and we came back in 2009. We retested it, and we returned in 2016, and monetary intervention in 2022. Double confluence. Double confluence. Look at it. So when we say demystify, it means looking back in time. So you see here, the price action was not a coincidence. It was a mathematically engineered price action. Trading is more like mathematics, and you have to be a little bit logical. Now, this major reaction happened at a double confluence. We had a horizontal rejection in 1984, about 40 years, 41, maybe 42, 43 years from now, and price return here, and you see on the double confluence a descending trend line meet a horizontal support structure, and you have seen a strong monetary intervention. And I want to put this into perspective. That's double confluence. It's not just an ordinary reaction, it's double confluence. Yes, so that was double confluence, and you have seen a clear monetary intervention. So why are we looking back in time? Everything you have seen that happened in the past is what is going to happen in the future. So we've taken care of that, and we have an ascending trend line ATL, which I've already put here. And you see price creating a series of support structure 1, support structure 2, support structure 3, breakout of structure, retest 1, retest 2, retest 3, retest 4. Finally, in 2007, we had a first retest in 1993, another retest in 1994, another retest in 1996, and we return in 2008, 2007. The trend is valid. In the future, if buyers make their way up, if British pounds manage to outsmart the American dollar, this remains a potential sell zone. Now, if you are not trading higher time frame, there is no way you are going to see this. There is no way you are going to see it. So this is the advantage of looking into higher time frame. The monthly time frame, the weekly time frame is the highest level of respect you can give to chart. So when your charting extends to monthly and weekly time frame, you are respecting analysis. And when you look here, we have a strong breakout of structure that price have also created. We have here a resistance structure 1, resistance structure 2. After price breakout from an M structure here, we have an M structure here in 1992. Price broke out from the neckline, retested 1, retested 2, breakout of that neckline we had here, and price turned into a support structure 1, support structure 2, breakout of 2 support structures, 2 resistance structure, respecting a the neckline of a double top structure in 1991 and price return here in 2014 to respect it as a resistance structure, and you have seen a drop in price. Technically, that puts here as a net supply roof. It's a supply roof currently because when you look back in the price action in 1996, you look at the price in 1998, you look at the price action in 2005, and the break and the retest in 2014, a technical retest is expected as the British pound's muzzle is way against the United States dollar. So the next thing again we're going to look at again is a key price action that we are trading currently. We have a descending trend line here, a price action in 2005, and we have a clear break and retest here. If you look at it from the line chart, you will see a clear break and retest at that level. You can only see that when you put on the line chart, which becomes a common mirror to view price from in-depth analysis. You will see here a break and retest, and the price came here, broke out of the structure, and also retested it. And you have seen that we have a breakout here followed by a retest here, and that has been the trend which we're enjoying. ROTRS1, ROTRS2 in 2021, RTRS3 in November 2024. Full demystification, that's what we're doing. And you have seen a breakout from that structure set the British pounds on a bullish course against the United States dollar from that trend on a monthly time frame. Look at the reaction from here. 2004, we have your resistance structure, 2006, breakout of structure. Price came back here. You see a clean break and retest here on a lower time frame. You will see it. You can see here. You can see it. There's a clean bar here with a monthly candle rejection, bearish continuation drop. 2009, you can see that bearish drop. The British pound suffers in the hands of United States dollar complete. From 2007, we had a continuous year of drop into 2009, non-stop dropping. That non-stop dropping was not a coincidence. It was mathematically engineered by the both central banks. And you can see price action from here. After break of structure, SR1, SR2, SR3, break of structure, RS1, RS2, RS3, and RS4. The bearish origin started from here, 2007, and the price continued to drop till we return into a key critical support structure in 2009, and also coincide with the beginning of the rally. If you look at it, if you take this back, you see it coincide with the beginning of that rally, and you see currently we have been rejecting on this very roof. I also change the color to put it into perspective, and that is what it is. The market is mathematically engineered. And you see what price has done here. We have series of M structure here, double top structure, breakout of the neckline, sell. And we have a likely monthly. This looks like it looks more like head and shoulder chart pattern. After we have here an M structure, breakout, sell. We had here head and shoulder, breakout of neckline, sell. And when price return here, price is respecting the neckline of the head and shoulder chart pattern we have in 2021. You can see it's equity. This is double top. This is head and shoulder. And you can see what price has done here, and we are rejecting. And what we are looking out for is to see if we have upcoming fundamental that will boost the upswing of the British pounds against the United States dollar. If you look back under Sir Andrew Bailey, the head of British Bank, and we are going to see that there will be monetary policy report that's coming in 30th July 2026. Currently, the British bank is operating at 3.75 interest rates, interbank and lending, and we have the Federal Reserve under Kevin Walsh trading at 3.5, 3.75, and FOMC is coming 28, 29, 30, and there will be meeting. The convergence of heads of all the central banks will sit to discuss. But you see, when we look at what's going on in the United States, it's a little bit this week is going to be a very volatile week. We're marching into a more volatile week because it's softer than expected US CPI and PPI. It's leaning towards a dovish side for Fed policy change. And we don't know how this is going to go, if they're going to hold rate or they will cut rate. So whatever comes out of it is going to affect a directional bias of a GBP US, and we can see the interest rate differential has been reduced. The gap has been reduced, apart from the 10-year Treasury bond yield. The British 10-year Treasury bond yield is still very much a little bit higher than the US 10-year Treasury bond yield. So that's the only advantage, which we see that is very clear for carry traders. But at the moment, what I see here is that the British pound is set on a very strong support after a breakout from a monthly descending trend line, and we have seen that leverage by close of the week. So this becomes a key critical support on monthly time frame, and buyers are holding firmly on the structure here on a monthly time frame. If you look at it from the line chart perspective, you see that the month of November 2025 have created support for British pounds to leverage. So what we are seeing is a technical breakout from the structure that have held price, and a breakout from there. Could stop here, come here, retest, and we see if the British pounds will enter into this zone. Very much possible based on policy divergence. So we'll be watching. We don't know what Federal Reserve is up to, but whatever comes up based on the current CPI and PPI data reports, I think it's leaning towards a dovish side for Fed, leaning towards dovish side. And if that becomes the case, then it's a bullish catalyst for gold, a bullish catalyst for silver, a bullish catalyst for copper, and we could see other peers trading against the United States dollar smash the US dollar to a reasonable extent. So that's what we see, and we do hope that this represents what we expect is coming in the market. We just hope. We just hope. So this is what I see. I want to change this. It's supposed to be red. I mean, it has no reason to. So that's a supply roof. So we use that color for supply. Very fantastic retest in 1985 low, and price returned in 2002 and respected it. So it tells you that whatever the market has done in the past, it will do it again in the future. So the market is not going to put exceptions to any reaction. So what it did in 2000 in 1985, price returned and respected that low. And we saw a double confluence. The descending trend line meet a horizontal structure, and we have seen an upswing. It's logical trading. So this is how we see it, and I will go into lower time frame to look for other opportunities that lie, and see if we have an opportunity. But I think at the moment the week will open in favor of buyers, as I already posted a buy idea on British pound dollar. So this is what I see at the moment, and so let's see how it goes. Bye for now.